It seems like we have two economies. Some people that have less debt and were cash heavy are able to get 5% on their money, whether they're buying treasuries, whether they're parking their money in money market funds. So some people are living pretty decent right now, but then you have others that are like, um, struggling with the cost of inflation. I mean, the rise in car insurance prices, for example, the rise in food costs still are heavy. Like you still going to the grocery store and you're not coming out with as much groceries, right? And so I think we're just in this place where the Fed is staying tight, the government's continuously spending, the deficits are going to continue to grow, the interest expense on the debt is going to continue to grow, and I just don't know what the way out is.
Darrell Thomas, Money Level Show host. Thank you for coming on, my friend.
Yes, yes, happy to be back. Thank you for having me on.
Well, the gold and silver price is up.
Yes, indeed, it is. It is. I feel like I'm building some wealth because like it's increasing in its price measured in dollars. But I still haven't really sold anything yet. I had to get rid of some stuff. I had to get rid of some collectible coins. I was getting into that for a while with the super high premiums, and so I got rid of almost a lot of it, except for some of my just favorite coins. But that's the only thing I've sold. Everything else I've held on to.
So, what are some indicators that you would look for to kind of tell you to sell?
Well, in terms of like physical, I try not to never sell unless I'm like really, really like in the pinch. Like when I had went back to school to get my master's degree, and I was looking at the cost, and I was like, yeah, this is expensive, and so at that point, I had probably had like 10 ounces, and I was like, okay, I got enough gold, I can sell some, and so I was able to actually fund my way through college. And some people may say like, oh, well, college ain't really a good investment, blah 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 blah. I was able to increase my income by about 50 grand a year in the last 2 years. Obviously, the ultimate goal isn't to work a 9 to 5. Like I want to be out of the rat race, but I think that, selling some gold to be able to fund my way through college, to be able to increase my income significantly, was very, very, I think that was a wise decision.
So, how do you control your emotions when you want to buy this stuff, when you want to sell? It could be gold, it could be any asset. How do you control your emotions when things might, let's say, gold sitting at 1700 4 years ago. It runs
Mm.
up to 1800, 1900. How does one kind of control their emotions and kind of disregard the fact that they may have lost some gains, but the fact that it's still a cheap asset?
Yeah.
What's kind of like your thought process there? Also, how do you ride the roller coaster that is gold and silver and the gambit of the commodity index? You're going to have ups and downs. How do you play that without losing your cool?
I mean, obviously, with physical, I've known people that have sold like in emergencies, so it just depends on what's the priority at the time. But in terms of like, stocks and even just holding physical in terms of like as insurance, whenever I'm trying to time markets, I usually miss out on uh, quite a bit of gains. Usually, you have to really have a time horizon for um, how long you want to hold an asset for. So, for example, I was holding um, uh, Chemical, and I was investing in uranium a few years ago, holding Chemical, bought Chemical at $12 to $14, and saw Chemical run up to $29, and I sold it. This was like the first retail boom that we saw in uranium, that first spike, and then I sold it like, yeah, I got out, I profited, right? But my time horizon was still too short because like it feels like this market is just getting started, right? And then Cameco has not went back to that price. Volatility can get me, especially if I'm messing with like options like option trading. So stuff like that, it's hard to control my emotions. But in terms of like holding shares, the more conviction I have, the longer I'm willing to hold an asset. So sometimes I have sold out of equities and rebought back in when I see like a lot of weakness. I saw this with Franco Nevada. Franco Nevada was trading at over 130, about $135 back when I went to the New Orleans Investment Conference. I think that was when we did our first interview together. I was in New Orleans, and Franco Nevada tanked to about 125, then ended up going down to like 115. I'm like, oh, this is really good price. The last time I was buying this was at 108. So, sometimes I see those types of trends or in the stock price, and I'm like, yeah, this stock is just being sold off. People are overreacting. I'm gonna actually buy in when there's blood in the streets. So that's a way that I try to help control my emotions. In terms of selling, it really depends. Sometimes I'll sell some shares if I need to like fund something or something in my personal life that's going on. Oh, other than that, like I just try to buy cheap and have a longer term outlook. And then I also been focusing more. It's not the most profitable, but focusing on the compound of dividend payments. And so, like some of the oil companies I'm in, some of the, I mean, like Echo Patrol. Like I'm in Echo Patrol. They pay like 20% dividends, right? So it's like, okay, well, let me sit here, let me park some cash here and compound, even though the price can be, I mean, it hasn't been too volatile, but it can go up and down, go down to $11, pop up to 12.80, whatever, right? And it's like, okay, I can stomach that type of volatility. And plus on the back end, like I'm getting a significant amount of dividends that's going to help cover that anyway. So, those are like some of the ways that I manage emotions and try to implement strategies, and obviously trying to get better at it too. So
Do you use TA or fundamental analysis? What's kind of like your go-to methodology?
I mostly use fundamental analysis. Like I will look at, balance sheets and, things like that. I'll also look at the macro in terms of like, okay, where's this at? Things like that. Um, I watch other people that do it too. And so mostly fundamentals. I do sometimes from time to time I'll use technical analysis, but sometimes I feel like technical analysis it applies a lot to traders. And for me, I've struggled with this in terms of like, okay, like when I'm doing like a short-term trade, I'll use, I'll try to look at charts and some of the people that I've subscribed to. Okay, what are they saying? The charts are saying. Okay, let me look at the charts too. But that's more in terms of like short term trades. In terms of like the macro, or not the macro, but just the long term view. I try not to really look too much at charts. I'll just buy weakness when I see it. Okay, can I get in at a good price, even though I'm not necessarily measuring a good price based on the charts? Just like, okay, I see the price is cheaper than where it was. I'll get in and I'll look at like the historical prices too. That's one chart I'll look at. I'll look at historical prices, and say like, okay, am I willing to make this bet based on where it's at now? And so those are some ways that I kind of measure my investments. I also follow people like, to be, bluntly honest, like I follow people like Lynn Alden. Like, okay, what is Lynn Alden buying? 'Cause she puts out in her newsletter her stock picks, what she's buying, her case for it and stuff. And I'm like, okay, I'll read her case for it, and then also, just see if like, okay, it makes sense for me. So those are some other ways that I'll invest too.
Yeah, I leverage newsletters as well. My favorite is Capitalist Exploits. We have the link to that down below. Super great newsletter. In a way, the way I view these newsletters is that they're kind of like your outsourced analyst, meaning that they do the deep research. You pay them to do the research for you, just like
Mm.
you would in any company, right? You would have an R&D team. You're the CEO of your portfolio, and then for me, it's Capitalist Exploits. Capitalist Exploits does research. I can take that information. I can act on it. I could look at their stock picks. If I agree with it, I'll hit the buy button. If I don't necessarily agree with it, I might hold off. But I'm kind of right with you there. Again, we have a $1,000 discount for capitalist exploits linked down below. Darrell, let's go ahead and shift over to the economy. Generally speaking, what's your kind of like 60,000 foot view of the markets at the moment?
Right now, there was a lot of bets on the Fed rate cuts this year, and I've been thinking that inflation was going to come back up, and I think that in terms of like market performance, back in early 2023, the market was significantly cheaper, especially in some of the growth sector. So I was buying shares then, and then I still had I was like too bearish at that point. So I was getting too bearish, and I was like, okay, the market's going to tank, blah blah blah. Even though the market had already tanked, so I kept thinking it was going to tank further. And the expectation of rate cuts, like, hey, the Fed isn't going to keep rates this high for this long. Inflation is going to come down. There's not going to be a recession. All of these things started driving the markets a lot higher. And so now I think that we're at this point where the expectation for rate cuts is disappearing, and people are seeing like, okay, the Fed is going to keep them higher for longer because we've had a retracement in inflation, their inflation expectations of where it's supposed to go. So we've had it pretty much stay stickier than normal. So I think that inflation is going to continue to stay sticky. I think that the Fed is going to keep rates higher for longer, and unless there is a massive crisis or something, where it will force their hand to cut rates again. But I think that in terms of like the cyclicality of interest rates, right? We were in a 40-year decline of interest rates, and so I mean, interest rates were over 20%, about 20% in the 80s. It's been on a straight decline since the 80s. And from people that study like these cycles, they're like, okay, now interest rates are gonna have to go up. So, I'm kind of watching that as well. I think that Lynn Alden talks about fiscal dominance, and I look at that in terms of, okay, I can see how the government is like financing uh, financing a lot of people's spending. So like people that are getting entitlements, they're still getting cost of living adjustments, right? And the government is not going to cut them off at the knees, right? That's their voters, right? So I see this kind of tale of two economies. Some people are benefiting from the government spending so much money, and other people are not benefiting because they're getting eaten up by inflation. So it kind of like it's interesting because it seems like we have two economies. Some people that have less debt and were cash heavy are able to get 5% on their money, whether they're buying treasuries, whether they're parking their money in money market funds. People that are able to receive some of these entitlements are in a good position, and so some people are living pretty decent right now. But then you have others that are like, um, struggling with the cost of inflation. I mean, the rise in car insurance prices, for example, the rise in food costs still are heavy. Like you still going to the grocery store and you're not coming out with as much groceries, right? And so I think that, it's in terms of the economy, it's pretty interesting. I was watching the job numbers too, like the unemployment numbers, and I don't fully like understand them, but just seeing like how they've remained pretty strong. But then like, I'm starting to see, I've seen some people say that, hey, we're kind of at this reversal point in unemployment, in which I've seen like in my personal life, people struggling to find work. So that's been pretty interesting too. So I think we're just in this place where the Fed is staying tight, the government's continuously spending, the deficits are going to continue to grow, the interest expense on the debt is going to continue to grow, and I just don't know what the way out is. And so that's kind of just my 60,000 foot view on it.
Yeah, we are in uncharted territory. What do you think is the most what sector are you most bullish on at the moment?
Sector commodities for sure.
More specifically, like what specific metals, uh, energy source, etc.
I'm bullish on, I'm kind of bullish on, well, I am bullish on oil. Oil, I'm fairly bullish on. I still buy shares of oil companies. They pay solid dividends. They're still making some big deals. I mean, even like just looking at these deals with like Hess and Chevron and Exxon paying billions of dollars to acquire these other companies, and just looking at what OPEC's doing, as well. I mean, we still got to refill the strategic petroleum reserve, right? So that we put a pause. I think we put a pause on that because the prices were too high or something. But um, so I'm bullish on oil. I'm bullish on uranium. Uranium, obviously, with I do a lot more studying in the uranium space in terms of, supply demand, but also like what's happening in the term market with contracts and what's happening at the government level with regulation. I mean, looking at things like Microsoft and Amazon and Google investing in nuclear power. So, I mean, just seeing the whole sentiment change around uranium. I was having a conversation with a friend of mine back in, what was it, 2021, 2020 or 2021 about nuclear energy. And she was just like, yeah, I question your ethics and stuff. And she's still a friend of mine. Like, it's cool, you can disagree. But she questioned she questioned my ethics in investing. And I was just like, hey, this is the cleanest form of energy, blah, 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 stuff. And then now you're seeing like a complete 180 with government, coming in, changing laws. I mean, looking at the Russian uranium ban, right? There's so many tailwinds for uranium. Also, the metals, mostly gold and silver. I have been speculating in palladium. This is just a what do you call it? A YOLO play. We'll see. I was buying these palladium grams for like $100, a couple years ago. Now they're at like half 50% off, but who knows what happens? I mean, I can afford to lose whatever I've invested there. But gold and silver, particularly, um, obviously gold. I mean, you got central banks buying gold. You got gold rising in the midst of higher interest rates. You have gold rising while the dollar is staying pretty strong. I mean, compared to where it was historically. I mean, the DXY. You have the central bank buying of gold. You have people of China buying gold. You have, so there's just so many tailwinds there. And then also silver as well. For a while, I didn't have a super high conviction on silver, but I knew that silver would follow gold at some point. Um, and high conviction, I didn't have a high conviction mostly because of like not fully understanding the industrial demand versus the growth in the industrial demand versus like the demand from like retail investors and it being a monetary metal. And so it having this hybrid industrial monetary thing was kind of confusing for me and such. And so, however, I mean, as we see, like the silver to gold ratio is coming down and silver is following gold, which it has always historically done. So.
Excellent. Well, hey, Darrell, we appreciate your time here on the show. Go ahead and drop us your socials. Where can people find you?
Yeah, so you can find me at on X at Money Level Show, and then you can also find me on YouTube at The Money Level Show.
All right, man. Well, hey, so great having you on. Uh, if you enjoyed this content, be sure to give us a like, comment down below, subscribe to the channel. I can't tell you guys enough. 85% of the people that watch this channel are not subscribed. So if you enjoy this podcast, show, whatever you want to call it, please hit the subscribe button. Every little bit helps. And with that said, you guys, I will see you in the next episode. Bye, y'all.